Hello and welcome to EXP's Retail Traders Special Session. Every Monday at 2:30 p.m. I bring to you one topic about the stock market which will make your journey easier and more successful. In today's session, we are going to discuss about monitoring stocks and tracking your portfolio, or rather tracking stocks and monitoring your portfolio. Are they two different? How are they different? And how does it matter? इस सेशन में सब डिस्कस करेंगे। तो चलिए इसी के साथ हम स्क्रीन के तरफ बढ़ेंगे अब। बट उसके पहले जस्ट वन मोर थिंग, दिस सेशन इज मोर लाइक अ प्रीक्वल टू द लास्ट वीक सेशन वेयर आई टुक यू थ्रू स्टेप बाय स्टेप through my trade tracker. The trade tracker is nothing but a Google Sheet workbook which I have developed, where I personally have been entering my trades and my purchases and losses and my sales, and have been studying it to improve my own trading strategy. Now, since I have started a new company, EXP-Invest, I have started creating this tracker for my members. Recently, I launched the second version of that tracker, which is much more advanced, has much more sophisticated formulation and conditional formatting, and is definitely more aesthetic. So I launched this tracker for my members, and it helps them stay on top of their investment. So how do you go about tracking stocks and monitoring your portfolio? That is what we are going to discuss in this session. And if you want to know, if you want a demonstration of a real-time tool or trade tracker, feel free to hop over to my channel and look for the last Monday's 2:30 p.m. session. With that, let's start with the session now. Alright, so how to track stocks. An overview of different methods for tracking stocks and monitoring portfolio performance. In this, we will also talk about market trends, we will talk about risk strategies, risk management strategies, and I will try to give you as much insight as possible. बस आपसे एक request है कि stay interactive during the session. It would be great if you shared your comments in the comment box if you like this stream, and if you also shared your suggestions or feedbacks. So the agenda is simple, like I said. How do we track stocks to come up with or identify new opportunities, and then how do we monitor our portfolio, which is very critical to our success. What a lot of people do is they merge this into a very easy but very useless activity called tracking portfolio. So they, instead of going tracking stocks and monitoring portfolio, they just go tracking portfolio, where they open their app where they've got all their portfolio stocks and just look at how their portfolio has moved up or down today in terms of percentage or absolute amount. Trust me, that leads to only a lot of anxiety and a lot of emotional turmoil. It leads to no good use. It's not a good use of your time at all. It leads to nothing productive. So investing in stocks is of course a very exciting way to grow your wealth, right? But it is very daunting, especially for beginners. And a lot of people, despite of having spent many years in the market, are still behaving like beginners because they've not given enough thoughtful consideration to what it means to do the thing in the right manner. So how stock tracking helps you is it helps you identify new opportunities. Now, obviously, if you're going to just open the ET app or, any other app that's out there for tracking stocks, and if you just keep looking at it and reading it every day, I mean, it's just not going to make any sense in one single day. You have to remember what you're reading, how a certain news is impacting a certain stock, how it behaves. When a big economic data comes out, which sectors is it impacting? When a certain sector moves, what kind of index is it affecting? When an index moves, a broad market index, which are the sectors which are getting affected? Now, there is just so much knowledge that you have to absorb that it's best to do it over time rather than, shoving it all at once. It's really hard to process when you learn too much at the same time. So it helps you, of course, in identifying new opportunities, and monitoring your portfolio helps you keep tab on the opportunities which you've captured. Now, what happens that when you're not monitoring your portfolio and you're only tracking your portfolio's value, you end up not looking at the individual stocks which you have purchased, and as and when you come across new opportunities, by way of a colleague talking to you, or some TV analyst, or some analyst on ET live stream itself, or YouTube, what will happen is you'll end up only buying and buying and buying with no idea of when you're supposed to sell. But when you monitor your portfolio, you will automatically develop the mindset that, okay, if I'm purchasing a stock, I need to sell a stock. So when do I sell a stock? When it goes up, when it goes down, what should be my exit strategy? You'll start asking the right questions to yourself. Now, how to use tools like stock charts, Google Sheets, and risk management strategies to ensure that your investments are on track. We will cover all of this in the duration of the session. So, stock monitoring. Let's talk about stock monitoring. Let's begin with this. What is the process of stock monitoring? The first thing first, you first have to make an input of the stocks which you have purchased. Where will you make the input? It can be in an app, it can be in a spreadsheet, or it can be with an advisor. We will come to that in the tracking part, but here you first need to make a manual input, and you have to do it in a disciplined way, and not just of your purchases but also of your sales. Firstly, when you do it manually, it registers better in your memory. Secondly, you hold yourself responsible. Now, why stock? Stock monitoring can also be for stocks which are not part of your portfolio. So basically, if you say if you just want to track the Nifty 50 stocks, it's best to have a watch list somewhere and go over the activities which they are experiencing, like the earning results. You don't have to get into the details, but at least on the high level, what is going on in them, it's best to keep tabs on that. This helps you with risk management. See, when you're trading in the market, especially for active traders, what happens is the majority number of your trades will be losing trades. Okay, this is true for even the best of the traders out there. A lot of times that the majority trades, even if it's not like that throughout the year, but a lot of times, majority times of the year, it will be that majority of your trades are losing trades. Some of your trades will be dud trades, where you just get in and get out because nothing happened, the market didn't move, your strategy didn't play out, or it's just been too long, it's sideways, you needed capital, or you just had to leave, so you couldn't monitor a lot of things, so they were dud trades. And then there'll be a small percentage which will be winning trades. Now, your risk management strategy needs to be such that when you're experiencing the losing trades, your losses are minimum. And when you're experiencing winning trades, you're able to maximize your profits. This is only and only possible with risk management. See, risk management, I was listening to a very good professor of psychology. His name is Jordan Peterson. And he said in one of his lectures that religion is important to mankind because it is what you fall back to when everything goes wrong. It is what gives you hope. It is what saves you when everything is working against you. In the stock market, risk management is your religion. Because when everything is going against you, when you're trying, you're doing your best, but you're not getting the results you desire, in order for you to still survive in the market another day, to be able to fight tomorrow, you need to have a strong risk management strategy. And you are only going to survive if you've managed your risk, if you've not incurred bigger losses than what you can endure, so that your capital is still intact, so that tomorrow when the trends turn and become favorable for you, you'll be able to sustain. So in the market, always think about reducing your losses and maximizing your profits. People obviously do the opposite of this, right? When they see a loss, they live in denial. They don't want to book their losses because they're waiting for the break-even point. And of course, when the break-even point comes, they don't exit thinking that the stock might go further up. Usually it does not, it goes back down, right? And then as soon as they see profits in their portfolio, they want to book that profit, right? They just want that kick of having made some money in the market, 1,000, 2,000, 3,000 rupees. They're going to end up booking the profits, just for that kick. What happens then? These winning stocks, which they ended up selling too fast, keeps running for 10, 15, 20, 30%. And you're not alone in this. it happens to everybody. Lots of top investors will tell you in the market that they've lost more money in the stocks that they ended up selling too fast than the stocks which they actually sold because of stop losses, right? A lot of retail traders that I serve to via EXP-Invest also have expressed apprehension to using stop losses, because in their mind stop loss is something that triggers and then the market reverses. But that is not true. It's just your biased memory which is making you remember those specific instances and enabling you to forget those times when stop loss actually saved your capital from further 10, 15, 20, 30% erosion. Now let's talk about tracking your portfolio or just tracking stocks, right, in general. Now, in order to track stocks, you have to have portfolio, like you have to have stock tickers, you have to know what are stock tickers. Okay, so stock tickers are basically the codes which are used to identify individual stocks or individual companies in the stock market. Now, these stock tickers are known by different codes based on whether you're looking at an exchange, NSE, BSE, or you're looking at like which broker you're using or which underlying instrument or app you're using. Now, for instance, Reliance on NSE is the ticker for Reliance Industries is Reliance, whereas on BSE it's a numerical ticker. Now, if you go to different brokers, for example, I use Zerodha, so in there, Zerodha follows the same norm as NSE. That's fine. But if you look at HDFC Securities, they have their own way of indicating these companies' stocks. Again, underlying instrument means whether it's an option, whether it's a future contract, any kind of derivative contract with different expiries will have different ticker names. So it's very important that you understand these tickers and how they are expressed. In the stock market, there is a huge cost associated with something called slippages, which is nothing but, executing the wrong order at the wrong time. It can be trading in the wrong stock because, the companies had similar names. It can be because of trading the wrong instrument or the wrong option strategy instead of call, trading puts. So you have to be very careful about all those things, and the best way to avoid such mistakes is by making sure that you're well aware of the stock tickers. Now, the second thing that will help you in tracking these stocks is the financial news. You have to stay well read in the market, well informed. You have to know when major economic data is being released, because they have significant impact not just on intraday trading, but also in terms of direction of the market. For example, what are the major contents of the budget? You don't have to listen to it live, you don't have to follow them second by second, but it's important that after every major event, you at least know a gist of what happened, just the meat of the major event. Investment apps. There are lots of investment apps out there which can help you or aid you in monitoring your stocks which you're interested in. And to identify these stocks which you're invested in, it's the easiest way is to look around. What are the companies that you're producing, the products that you're using, the services that you're using, the travel that you're using. Look around, be mindful, start tracking them. It's a great way to move forward. Now let's talk about trends. So what are trends and why are they important to you? Now, what are trends is very easy. It's basically the direction in which the market or any underlying tends to move for a prolonged period of time. Now, the trend is your friend. It's a very, very common saying in the stock market, especially in the world of technical analysts, which is my world. But you also need to determine which trend do you want to befriend. Are you talking about the long trend? Are you talking about the short-term trend? A lot of people have the tendency to constantly switch between these trends depending on their convenience, in the sense that suppose they start off in some trend in some stock, they start a position with the intention of holding it for long term. As soon as they see 5, 6, 7% profit, they want to sell it just for the kick of selling the stock. A lot of times this also happens that people purchase stocks for the short term, but now because it has already gone so low, 5 or 6% low, and just because they don't want to experience that loss, they are going to find reasons to justify their holding the stock. They will start quoting other analysts who may have given a long-term view on the stock, so on and so forth, and they tend to change their um, ideology. So in order to demonstrate this point, I want to show you something. So you can see on my screen the charts, and here you can see the time frame. So you see this is 3M, you see this is also 3M. But do you see how different these trends look? Like if you look at this scale, they don't really look that different, do they? 3M and 3M, but they're actually very different. If I squeeze out this one, you can see that here is a huge bull trend. If I squeeze out, and here you can see that there's been a massive fall. Now, if I tell you that this is the 3-month chart and this is the 3-minute chart, you'll understand what I'm trying to say when I talk about trends. Here, what seems like a really bearish trend with two massive red candles is something that is not even visible here. So for somebody who would have, so imagine somebody who would have bought near this top thinking that they are going to be short-term investors, and they would have experienced, say, a small loss. Say they bought somewhere here, because this is where technically a lot of retail investors end up getting stuck. If they entered at 1686 and they saw their stock fall down lower and lower below 1600, below 1500, and they thought, you know what, I'm going to be a long-term investor because Muthoot Finance, why not? You know, it's a good stock. And because they were not true to their philosophy, now they've been stuck in that stock for nearly 2 years with no profit in sight and having lost nearly 40% of their capital. So that's what I mean by trends, that when you determine that you want to be in the market, you need to determine what is the time frame that you're willing to play with. Of course, you don't have to bifurcate it very strictly in the sense that you cannot be a short-term trader and a long-term investor. But then it's very important to know for every position what your intention is rather than switching back and forth. Now with that, let's move towards portfolio monitoring. Now portfolio monitoring is the single most successful tool in the market because it helps you know and identify your own trading patterns. So there are lots of tools which you can use to monitor your portfolio well. The first is of course portfolio trackers. My personal preference is using Google Sheet workbook. This is the session that I was telling you about, which I did last week, where I demonstrated my trade tracker. So if you're interested in that session, I would recommend that you quickly hop over to my YouTube channel and check that out. For you, what I'm going to do, I'm going to drop the YouTube channel link in the chat so you can easily find that. In fact, all of my previous sessions are available for you on my YouTube channel. The next portfolio monitoring tool is of course investment softwares. Now, if you don't want to go the hard way of inputting your trades and adding remarks and stuff, there are some investment softwares, although I have not used them, which can help you do better. Now, remember, when I say investment softwares, I'm not talking about investment apps, because investment apps don't help you portfolio monitoring. They only help you in portfolio tracking. The difference is that the problem with investment apps is that as soon as you mark a stock is exited, it will be completely gone from your holding. You will not be able to see what happened to the stock later on. The only way to look at that later is to check out the watch list, which is not very useful because you can't see your execution prices in the watch list. You need to know what were your execution prices, buy and sell both, and how the market unfolded. The whole beauty of the portfolio monitoring lies not at the time of your doing input, but 3 months later when you come back to do a quarterly review and extract from the tracker your behavioral patterns, which in line with the market worked versus didn't work. Now, this is irrespective of profits and losses, because what worked for you may have given you a loss, but may have been a very good behavior or a very good behavior pattern in the market, whereas sometime you might have made profit. Like just yesterday I was speaking to somebody who's a beginner, I would say he's a beginner in the stock market, and he was telling me very proudly but also with a hint of shame that he made a lot of money in idea. Now it's very evident that internally he knows that it was a pretty fluke kind of a trade probably where he made money, and he was asking me if he should go forward and invest again in that stock. So you probably know what my answer to him was on that. But this is what happens when you're not being mindful of whether your profits or losses are coming out of good behavior patterns or bad behavior patterns. You tend to blindly repeat your profitable trade patterns if you're not being mindful, which means that if you're not mindful, you may start hating stop losses because they brought you about losses, because you're associating good and bad only with the green and the red. But that's not how it works. And the third and the easiest method to monitor your portfolio is to obviously get associated with the research analyst and have them do the hard work for you. From picking stocks to adding them in the tracker to maintaining the tracker and doing everything for you, you've got it all settled. You also get the benefits of active trading. You also get the benefits of knowing what's working, what's not working. And of course, the fourth methodology is very simple, that don't do active trading at all and just go for SIPs and mutual funds. So that was about portfolio monitoring. Now to conclude it all, the entire practice of tracking stocks and managing or monitoring your portfolio is very essential if you want to be successful. A lot of people end up not doing both, rather merging them into tracking their portfolio, which is honestly a waste of time exercise. You must ensure that you're staying informed in the market. There are lots of feeds out there. There are lots of WhatsApp groups which are doing great job of filtering news from the noise and giving you the crux of it. But in order to be added to those WhatsApp groups, you have to have some kind of credibility as a good investor and investor or trader. And the best way to gain that credibility is usually by using social media platform to express your opinion, views, or just talk about the stock market with other people, so that your interest is put out there and people can invite you to be part of these groups. So that is all I had in today's session. I hope you found this useful, and if you are interested in also getting the trade tracker that I'm mentioning, then you are very much welcome to join me in my Telegram channel, where once you become a member, I will be more than happy to provide you with your own customized trade tracker, which will help you in tracking all the active ideas that I'm giving to members, as well as become a better trader yourself, but over time. Nothing happens in a day. So with that, I have come to the end of this session. Now before taking your leave, I will spend some time looking at your comments and answering your stock queries. So if you have any stock queries, now is a great time to add them in the comments if you haven't already. All right, let's look at the comments. All right, so we have Rahul Ingoleji. He's asking me about options, and Rahulji, I'm so sorry, but I'm not an options expert, and I tend not to give advice about options for that reason. I will, however, look at the chart of Divis Labs and tell you my short-term opinion on the stock. All right, so here we have the 3-minute chart, and from the 3-minute chart I can see that the stock is clearly in a very strong bull run, even though there was a very small negative divergence here. It does look like the momentum is gonna stay constant. So since you're saying that you're holding a call, I think you should do good, because see, on the cash side, this particular rally has happened against very, very good volumes, which is a fantastic indicator that the momentum is strong. So I would hold the stock for a target of 3360, because that looks quite probable. You're also asking about Kotak Bank. So Rahulji, I hope that was useful to you. If yes, then don't forget to like the stream. Please join my Telegram channel to connect with me one-on-one. Um, and okay, let's look at Kotak Bank. See, Kotak Bank has already given a pretty good rally, all right, and while there is some momentum left, see on Bank Nifty, I am expecting the target of 42,600 to be achieved. Let's just take a quick look at what Bank Nifty is doing. Yeah, so Bank Nifty is going into consolidation. It looks like it's taking some negative divergence, and but I think there I wouldn't take a position on this, but there is a possibility of a bit of a sharp upside here, and that is going to spill over in the banks too. So personally, I have a few long positions in banks which I've recommended to my members, because if you attended the last week's market outlook session, I did mention that lots of positivity is expected to return in banks, right? So this is basically where our rally started. It's really hard to give you a target, but I think this is a super probable level, because it has been happening since the last few times. So I would hold a target of 1945 in Kotak Bank. So moving on to the next comment, Raj Bhatia ji, hello to you too. And Chandanji, thank you for joining. So we have Hardik Shah. He wants view on HDFC Bank for fresh entry, and Clean Chemicals view on Archean Chemical Holdings. Okay, I don't really know the second stock, so I'm not going to comment on that. But let's take a look at HDFC Bank. See, for stocks which are not very well known, or very small cap, don't go about speculating in them. It's not very good for your portfolio and capital. I mean, sure, if you have a view on it, then that's something. But if you're just trying to go for like small cap jackpot stocks, not a good strategy. All right, so HDFC Bank is clearly very close to a massive, like a major resistance point right here, right? And moving on to lower time frames. So even though it is at the resistance, it's not like it's going to give a massive crash, but we'll have to wait and watch whether it's in any mood to give a move above here. यहाँ पे क्योंकि एक अच्छा खासा ट्रेंड लाइन रेजिस्टेंस है, आई वुड suppose that the stock will try to test that trend line support. So for HDFC Bank, I would hold out a target of max to max 5%. So naturally, making a fresh entry here is not recommended, because it's a little too late, right? You're trying to enter a stock after it has already rallied. That's not exactly how we function, so not a very good idea. And as we always say in EXP-Invest, enter stocks before the rally, not after. All right, so we have Mr. Praveen asking about Tanla at CMP to buy. So Tanla is actually a stock that I exited just this morning because of the fantastic rally that it has given. And the thing is that Tanla is still in a very strong downtrend, and because of that, now that it has come up and touched this gray line that you can see, which is the 500 EMA on the daily time frame, I will not suggest you to make a fresh entry, because Tanla के लिए यहाँ पे 20-25% तक गिर जाना कोई बहुत बड़ी बात नहीं है. So avoid going long in Tanla. Kanakraj ji, thank you so much for joining. Abhishek Gupta, Shivalik Bimetal. Okay, haven't studied this stock in like the longest time. Ishwarji, unfortunately I don't recommend any kind of leverage trading. to any of my members or anyone in general. So whether you should go short or not is not something that I can advise. लॉन्ग के लिए तो मैं नहीं बोलूँगी, बट शॉर्ट का तो एडवाइस मैं देती ही नहीं हूँ. Okay, let's look at what's going in SBCL. This is the correct stock, right? Shivalik Biometal Construction. Okay. So there is a strong bull run underway, and if okay, so I it looks like you can go long here on in this stock, because you know it's giving a pretty neat rally. I would recommend you to definitely use a stop loss though, right below the 61.8% retracement level, which would be somewhere at, so 437 का आप stop loss maintain करिए, जो present level से is around 8-9%. पर्सनली मेरे लाइकिंग के लिए थोड़ा बड़ा है ये स्टॉप लॉस, बट आपका अपसाइड टारगेट इज 634, विच मीन्स यू हैव अ रिस्क रिवॉर्ड रेशियो ऑफ एक्चुअली 3 and more, which is awesome. So this is a good counter to make entry in. So Abhishek Gupta ji, you can definitely go forward in this idea here. I'm just gonna leave a small mark that I have spoken about it today. All right. I've responded to Ishwarji, and okay, we have someone asking for view on SBIN, Dr. Atul Kumar. Welcome back to the live session. Let's see. So SBIN, as you can see, I am personally quite bullish, and the reason being कि 75-minute chart पे बहुत बड़ा RSI positive divergence है, which is usually an indication that you know it's gonna keep going up and up. So I am personally holding SBIN since the very bottom price, and for you to make a fresh position, actually today morning was a very good time to add the stock. अभी ना ये थोड़ा overheated हो गया है, तो please wait for it to come back to the level of like 530 and below to make fresh position, especially for short term. And on the upside target, I'm holding on for, you know, this channel's entire, like this entire channel to be covered by SBIN. So my target in SBIN is around 650. Now let's move on to the last stock of the day, which is Asian Paints, also requested by Mr. Arun. So okay, Asian Paints is showing a fantastic sign of reversal, and मुझे ऐसा लगता है कि you can go long on this stock, even though you know it has kind of gone up. Like मेरे खुद के purchase price से ये already 3% ऊपर जा चुका है. So if you want, you can go up, maintain a stop loss of around 2730, and on the upside I would suggest that you maintain a target at somewhere around this base, which is 3000 का टारगेट बनाकर चलिए एशियन पेंट्स में. सो आपका टारगेट है 3000 का, आपका स्टॉप लॉस है 2730 का, एंड अभी आपका प्राइस चल रहा है अराउंड 2850. सो you know, you do the math and you see that your risk reward ratio is more than 3. If it is, then feel free to go forward with your position. So with that, we have come to the end of this session. Today's session, again, if you've forgotten, I'll remind you, it was about tracking stocks and monitoring portfolio. We've covered a lot of things, the whys and the hows. So if you like this session, don't forget to leave a kind comment, give a like to this stream. You know, the engagement doesn't take a lot out of you, but it really helps my work reach more people. So it'll be great. I will see you again on Wednesday in the Let's Get Technical series, where I bring to you hardcore technical chart analysis or some lessons related to or expressed on technical charts itself. So I will see you on Wednesday at 2:30 p.m. Until then, have a great day and namaste.